Hello and welcome to FT Markets. Aside from the day-to-day movements in interest rates, stocks, bonds, and the things which investors are having to pay attention to every day, what about the big trends which are driving this world? What are the most important things that we should be paying attention to? To help us think about that, we're joined today by Jon Jonsson, a very experienced fixed income investor for Neuberger Berman. Hello, Jon. Thanks for joining us.
Thank you for having me.
So in terms of what's important, I think we've got a chart which a lot of people will recognize here, the US dollar over the last 16 years. So tell us, why is this so important?
Well, this is very important. As you know, the dollar has been behind a lot of the stress we've seen in markets today. We've seen massive appreciation of the dollar over the last 18 months. And that has affected commodity prices. It has affected different economies like China that is struggling with an overvalued currency that has been pegged to the dollar. So if we can trace a lot of things that have happened as we go through this chart, and if you look back, since 2001, China joins the World Trade Organization. China is growing faster than US. US is slowing, easing, and the dollar sells off. We go through the financial crisis, and then towards the end of QE, and when at the end of tapering, the dollar has appreciated a lot, and that has caused a significant dislocation. It benefits some countries and can have very disruptive impact on other countries and asset markets.
I think you've got a chart here as well of sort of some of the winners and losers. Everybody has been losing against the dollar, but that benefits some more than others.
Yeah, you can see on this chart how dramatically the world has changed. If you go from the top, you see the Chinese renminbi. China is obviously struggling with a slowing economy. The currency plays a big role in that. And if you go down the chart, you can see here at the top sort of economies that have been not as successful in managing or engineering a weaker currency to remain competitive. Then it is sort of the middle, you have the euro. The ECB has been very successful in managing down the currency. And that is economies you would expect to benefit from this. And then at the bottom, you may have some economies that have gotten a little bit
a bit too far.
A little bit too much of a good thing, where you actually have risk, having capital outflows, CPI spikes, and more disruptive devaluation of the currency.
So what's the big conclusion you draw away from this?
This is one trend that is driving significant, change in competitiveness and ability for economies to generate growth and inflation. There is a second trend that is very important to understand on what side you are on that trend, and that is the movement of commodity prices and more specifically energy prices.
And I think you've done something similar here for oil as well.
Yes.
And if we just explain this, I think this is sort of, you took 2014 sort of imports and exports of oil and imagined the difference between a $100 oil price and a $45 oil price.
Yes.
And this is who gains and who loses.
Yeah, and that's very important. Obviously, we have seen oil prices come down much more, but we're expecting lower for longer. And if you assume that that's a fair representation of moving from 100 to 45 as a long-term, then this would be the annual impact. And that's a significant wealth transfer. We're talking between the different economies, over $1 trillion that it's transferred annually. So that's a lot of money. And if you took it just at the consumer level, that would be around $3 trillion annually that are transferred from producers of commodities to consumers. So that's a big wealth transfer. It will really dramatically affect the fortunes of different economies over time. And we've just highlighted some of those economies, like India has benefits dramatically from this. So if you're on the right side of the commodity trade, you are gaining from lower import prices, and your currency has sold off, then you'll have won on both those trends. And that is important to find economies that are on the winning side of both those trends. And as you go through this, you can see Europe certainly benefits. And this is only looking at the oil.
So Europe is benefiting from the oil and the currency. So that sounds pretty constructive for sort of the continent. Thank you, Jon. So it seems like oil and the dollar, the big trends which are driving our world and which are set to continue doing so.